Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is the 22nd of July, almost Christmas. I can hear those jingle bells ringing already. And what we're going to talk about today is economic data. We'll talk about Tesla a bit. I was asked about whether or not, because I sent an alert yesterday, whether or not that alert had fired off and if we had executed a trade. We'll go over that chart. And we will also go over, as we normally do, go over the pre-market activity. But before we do that, I want to talk to you about our sponsor really quick, TrendSpider. Automated technical analysis, save the grunt work. Use automated technical analysis to help validate, if you're an experienced trader, validate as to whether or not your setups, your observations, as to whether or not your pattern recognition is accurate, and whether or not the trend lines you're identifying are spot on. I call it my spell check for technical analysis. And also, are you missing anything? Are you missing a setup? Case in point, I was corrected the other day on Rocket Mortgage that it was flashing an inverted head and shoulders setup. I didn't pick it up. One of my members did. So sign up, TrendSpider, 35% off below, and it's free with our silver and gold level memberships. Let's get to the show. All right, so today we have consumer confidence coming out at 10 a.m. It can cause volatility. I'm not expecting much. I think that this is kind of off in the weeds, but this bill that was passed, I think the president should veto it. I think he should veto it and shove it right up the politicians. You know what? You're going to tell me you're going to spend over $2 billion, send it overseas, and you're going to be giving the peasants $600 each? I don't even agree with giving out money. I'm more of a libertarian when it comes down to this, a fiscal conservative. But if you're going to do it, take care of your own people. Stop offshoring our money. This is our money, not Washington, D.C.'s. They need to get their house in order. So the president should veto it, and we should move on from there. Horrible bill. Any bill that's over 5,500 pages, yet they give lawmakers 7 hours or so to review it. You know it's bad. They're doing that for a reason. They've been doing this since Obamacare. Send your congressmen, your senators a message. They need to stop this. Horrible. They're selling us out. I digress. Consumer confidence, 10 a.m. Existing home sales. Watch this number. We've seen some really good home building numbers, building permit numbers, really good. I suspect this rally should continue. They're probably inflating a new bubble in the housing market. We're in the nascent stages of it. Enjoy it while it lasts. Tomorrow, they're going to pull forward, due to Christmas, they're going to pull forward the jobs data from Thursday to Wednesday. Not that Thursday is Christmas, but for whatever reason, they're pulling it forward to Wednesday. We're also going to get out tomorrow durable goods, huge number, very important. And then we're going to get some core inflation data, lies, and more lies out of the government. And then, of course, consumer sentiment. Let's get to the pre-market activity. All right, let's kick things off. 4-hour chart, E-minis. We are now down. We were up. Very volatile session yesterday. Looks like it's going to carry through to today. So how do we trade this market? Rules-based approach. Do we break out or do we break down below support? Simple as that. If we break down, we avoid. Maybe we add to shorts. If we break out, maybe we add to longs. Until then, we know it's going to be a light volume week, Let's not get lured in by the algos, because the algos are in charge. All the major players out there are over in Stad, over in the Alps, sipping fine brandy, having gone over on their private jets. Maybe they're over in Aspen. They do not want this market falling apart while they're away. The NASDAQ 100. It remains up just shy of 1/3 of a percentage point. Again, all we're doing here this time of year is seasonally bullish. Do we break out or do we break down? Simple as that. Yesterday we had a massive rebound. The Dow Jones was able to close positive. The other indexes weren't so lucky. The banks did well. But that's because the Federal Reserve, despite their dire warnings, they're just a den of snakes. You have Jay Powell that comes out last week, doom and gloom, looking for any reason to keep the money spigot flowing hot and heavy. Then come Friday, after the market closes, oh yeah, by the way, things are bad, but you know what? You can buy back your own stock, banks. It's okay. We're not worried about loan loss reserves moving forward. No, don't worry about that. We're all good. But to the average citizen, oh no, be careful. We're here. We're gonna be printing money until, of course, you're all bankrupt. So this is why you need to be long of precious metals. Crypto, you got to be long of it. They are destroying this economy, and they're doing it knowingly. U.S. dollar. This is the enemy of the people right now. Not of the people, of the politician, to be frank. And the U.S. dollar, while up this morning, is holding up by a very thin thread. Because what happened yesterday was that we were able to rally because, remember, before the election, the number that was being bandied about was that we were going to get $1.8 trillion to $2 trillion worth of stimulus. But Nancy Pelosi, the friend of the working class, and believe me, I'm biting my tongue as I say that, she said no. No, she'd rather wait. And she said this, now that we have a new president-elect, now I could sign off on this bill, which is half of what was proposed and offered by the president. And she patted herself on the back yesterday for doing a great job. Anyway, so U.S. dollar rally yesterday, not as much debt as what might be expected. There's more coming, folks. We're moving towards MMT, modern monetary theory. What does that mean for those not familiar? Lockdowns, meaning stay home. They're going to pay you to stay home. They want a permanent underclass, but more widespread than what they've ever had. What you're seeing is probably the most nefarious activity ever out of any politician this side of Mao Zedong. So the dollar up, as one would expect. Gold futures, well, they've come back a bit. They're down, though. They were down about $7 earlier. You could see a head and shoulders setup here, which broke. So I would still be careful here. Let's check out silver. Silver had a great week last week. We've pulled back a bit. We're retesting the breakout point, which is holding. Bitcoin continues to consolidate here. Possible head and shoulder setup. Left shoulder head, right shoulder, 4-hour time frame. Or we could be setting up for a double bottom setup and a breakout. You don't know until you get a follow through in one direction or the other. So we don't place bets on what may be setting up. We place bets on what has executed, either a breakout or a breakdown. 10-year bonds continue to move up higher. The 20-year auction went off very well yesterday. The TLT, which is a 20-year bond ETF, closed up higher. However, the 10-year note closed flat on the session. So the 10-year yield continues to hold steady and threatening to break out. And if it does, watch equities. You're hearing a lot of talk about yields pulling back or holding firm. That's not from what my charts are telling me. Here, for those that are not familiar, let's take a look. Here is the 10-year yield. The 10-year flat on the week, putting in higher lows, higher highs, and we are at the precipice of flashing a one handle for the first time since March. What else do we want to go over here? Oil. Oil down just shy of 1.5%. What else do we have? Nat gas is looking interesting. I was tempted to put on a trade yesterday. I held off. I punked out because we're in still in a deep downtrend that, here you can see I was looking at Boyle. This is a leveraged ETF. You can see they're trying to gap it up this morning. It's fading a little bit. I'm still open to it. Where is the commodity? Where's nat gas? Damn it, Bob. You should have been ready. Sorry, folks. I think it's, there you go. Such a genius. Yeah, we broke out. So we're moving up higher here. We're up 1%. So kicking myself a little bit, but not much. We're still within a buy range here. So we may be getting long of natural gas fairly soon. We'll just test the market, see whether or not we're right. If we're correct, it continues to move up higher, then we're add on strength. Looks like we had a little bit of a flash crash here on platinum. Palladium broke down. So precious metals under a little bit of stress here. Nikkei under pressure. All right, let's do some chart requests. I want to go over Tesla, which we discussed yesterday morning. So I was asked, did my alert fire off? Yes, it did. Did I execute a trade? No, I did not. Why? It's because we don't execute a trade simply when the alert is fired off. Simply because the alert gets triggered doesn't mean it's going to hold support. Case in point, we set up an alert that if we were to retest support, that I was interested in opening up a long position. And we did get the pullback. We did not chase the shares. And we pulled back, retested support. The problem is that we closed down below support. Not horribly, but we did. Therefore, we hold off. We'll see whether or not there's a continuation move lower. There was some news out yesterday that Apple's coming out with a, electric car. I think that's a ridiculous reason to sell off Tesla. But, sometimes traders just look for excuses to book profits. And maybe they found one. So I wouldn't be a buyer right here, right now. We'll look and see whether or not we can recapture support, or do they gap it up, fade, or do they simply just gap it down? We'll look for a better risk-reward entry point. Right here, right now is not favorable. Maybe that'll change by the end of the day. We're opportunists. Just because I'm a bit negative right here, right now, doesn't mean it's going to be the same by the end of business today. OPTT 4, Franklin. Daily chart looks good. We'll come back to this. I really like, I did a video on this a couple of months ago. It's on YouTube. Got a bunch of views. And I like this setup here. It looks really, really nice. I was bearish short term, and I was proved to be accurate there. Longer term, I was bullish because we were breaking out on a monthly time frame. And what do we do in the month of December? Well, we broke out. Yes, we're off the highs of the month, but we're holding support. Monthly chart looks very, very good. Only a few trading days left in the month. Weekly chart, very nice. We broke out last week, retest this week. This is a buy. We do have a volume shelf above at around $3.25. Daily chart looks good. I think this is a buy. I may be buying myself. Very good. Abbott Labs for Jim S. I think that's Abbott Labs. Yeah. Very nice consolidation here. A multi-month consolidation. We were extended back in August. We've spent the time since this topping action trading sideways. The path of least resistance clearly remains to the upside here. And seasonality-wise, let's go back to 2000. This has changed over the past 5 years, where December since 2000 is a seasonally favorable period of time. January, not so much, over 21 years. But when you go back over the past, let's go to 2015, and this is thin data, that's changed a bit. Seasonality, not that favorable in the month of December. However, it changes in January, February. So it's volatile. Seasonality is volatile here. It looks like it's a steady eddy, to be frank with you. So I think that these shares are ready to be accumulated. Very nice setup here on a monthly time frame, weekly time frame. Very nice. I think this is a buy. This is a great chart. Look at this. Nice orderly pullback, bottoming tails off of support. You can tell I've been here before with my graffiti. Daily chart. There we go. Beautiful bullish reversal bar yesterday. I would like to see this. You know, I don't like this action. This is concerning. This is a dead cat bounce. We broke down yesterday on a daily time frame. We held support. What I'd like to see is a breakout above this volume shelf at, let's round it up to 109 per share. A close above that mark makes it a buy. In fact, let's set up an alert here. There we go. We're good to go. Set it and forget it. Cena, JD. JD.com. Not loving the monthly action. Topping action last month. Inside reversal bar this month. Weekly chart. Orderly pullback. You know what? I don't like this trend line. Let's get rid of this. There we go. That's better. So what we're doing here is that we are in a wedge formation. I would wait on this. I would wait for the breakout or a retest of support at 77.65. Daily chart. Daily chart hit resistance yesterday, backed off. I don't see a compelling reason to go buying right here, right now. If it breaks out, great. If it pulls back, great. If it holds support, wonderful. I would wait for the final hour of trade before pulling the trigger. Hey, Tommy, how you doing, man? Yeah, thanks for reminding me, Tommy. Yes, if you folks could smash that like button, I'd really appreciate it. Thank you very much. It helps me out with the YouTube algorithm. And with that, folks, I'm going to say everybody have a profitable trading day. And I'll talk to you soon. Be well.